Hey, welcome everybody to the October version of The Pitch, where we have 3 experts with us to go over 5 ideas. We'll go by one to break down their thoughts on the 5 charts that they think are going to be very interesting to you. We'll find out if they're tricks or they're treats, or how scary their ideas are. We hope that you at home enjoy this and share some ideas in the chat with us. Follow us on YouTube if you're watching. Feel free to tell us what you think. But let's focus on our guests. With us today, we have 3 people that are not strangers to StockCharts. In fact, I was lucky enough to get together with this group in the Seattle offices for ChartCon, and we had a great time. So I'm happy to introduce to you first, ladies first, Erin Swenlin. Erin is the VP, Senior Technical Analyst at Decision Point. Welcome, Erin.
Hey, thank you. Great to be here.
All right. And then next is Joe Rabil. Joe is the president of Rabil Stock Research and a frequent guest on The Pitch. In fact, I've pitched against Joe many times. Joe, it's great to see you.
Great to see you too, Jay. Thanks for having me.
All right. And last but not least, the person I've never done the show with, whose Twitter handle has me scared, trend following moron. Actually, it's at T following moron. That's Dave Landry. Dave, it's going to be great to do this show with you. I'm looking forward to what you have to say. I have seen your picks, so we're going to have some fun with those. Dave, for those that don't know Dave, you can find him at davelandry.com. Dave, welcome to The Pitch.
Glad to be here. Glad to see that you were the guest host too, Jay. It was great meeting you in Seattle a couple of weeks ago.
It was great. And speaking of guest hosts, I am Jay Woods, CMT of DriveWealth, the Chief Market Strategist here at DriveWealth. I'm in our Jersey City office today. Dave Keller, unfortunately, he had to be called away. He's not feeling too well, so get better, Dave. And I came off the floor to New York Stock Exchange, and I'm honored and humbled to be hosting this great group. So why don't we get right into it? We've got a lot of great stocks. We're going to go with Erin. We're going to go with you first. So ladies first. And Your first idea is ChargePoint. Why don't you tell me about what you see here?
All right. So with ChargePoint, one of the things it does fall under consumer discretionary as a specialty retailer, but one of their big things that they do is build the charging stations for electronic vehicles. And I don't think we have enough of those right now. So I think this company has a little bit of an edge right out the gate with that. So what I'm seeing, and I have to say all of the stocks that I am presenting today, full disclosure, I do own. I share with my subscribers my Decision Point diamonds, and I do not present anything to them unless it's good enough for my portfolio. And honestly, I have had a pretty easy time this week of picking stocks. I'm really enjoying this bear market rally. So this one's the first one out of the gate. We have for price, we have a bullish falling wedge. Yesterday, it broke out of that wedge, so it confirmed it. Although I have to say, I really would have liked to have seen a breakout today above that 20-day EMA. Still, I think this one has merit. The RSI is not yet positive, but it has been trending higher. And the PMO, my price momentum oscillator, very similar to the MACD and the PPO, that is still rising. So I like that. One of the things that really popped out on the chart for me was that OBV divergence, that positive divergence, where you have slightly rising bottoms a little bit, but then you compare it to those price bottoms that are definitely falling. And that is a great sign. Usually you're going to see an extended rally come off of those divergences. And then underneath, I have stochastics, which are rising strongly. They're almost vertical as they move higher, which I love to see. And then I'm looking at the industry group compared to the S&P, the stock compared to the S&P, and then the stock compared to its industry group. That last window, I think, is really the most important because it tells you whether you're getting a stock that is leading in its group or not. This one is starting to do that. Admittedly, when I picked this one and got into it, it is a little earlier than I normally do, but I just don't want to miss this bear market rally that I think is going to be extended for at least a couple of months. I mean, I'm feeling pretty bullish, which is, people who know Decision Point, you know that's unusual. We're almost always bearish. So right now we're liking it. So I think that this one has some merit, and that's my first stock for everybody to think about.
That's a good start. I appreciate it. Now we're going to pivot over. I believe we're going to Joe. Joe and Dave are using ACP platform on StockCharts. Your first chart here is Archer-Daniels-Midland. And what, Joe, you're going to show us a weekly first, and then we're going to break down into the daily. So why did you pick ADM?
Yeah, so a little bit different feeling than Erin. Well, I'll put it to you this way. I found a lot of stocks that I thought looked attractive, but I was a little concerned about entry. That was what I felt was the most difficult part. I agree. I think we're in the midst of a decent rally here, although I would like to see a little bit better participation amongst all the different indexes. But with that said, I think there's plenty of names that are showing really good strength, and ADM is one of them. We've got, I don't really look at head and shoulders patterns, but it's pretty obvious this is sort of forming on a weekly chart, kind of inverted head and shoulders, finding support at the moving average environment that I look at, the 18 and the 40. And if you go down to the bottom, the AVDX line, which is the blue line, was overbought on that move over in April. It got pretty far up to 50, showing a lot of strength in the trend. And then we've worked our way down to a low level while the stock has just worked sideways. So I find this really attractive because sellers didn't show up really. The red line represents the sellers, and we just don't have a lot of strength in the sellers. It's worked off the overbought condition. I think this wants to get going again, especially now that it's taken out that high from last month. If we go to the daily chart.
Yep, let's do that for you. Let me just switch over. Thanks for your patience.
So
there you go.
This is what I'm talking about. I mean, we're up, 7 of the last 8 days or something like that. I mean, I would prefer to get a little dip in this. I mean, if you're going to play it off the weekly chart, it's not overbought. You've got to give it a little bit more room to do that. But I'm kind of thinking that I want to get a little bit better entry in some of these trades, because I would view a lot of what's going on right now as more of a trade rather than something that's the start of some 6-month move or something like that. I mean, if you can get a little bit better entry, I think you're going to be a little better off. And so I try and get this a little closer to 90 if we can do it. But I like the overall pattern. I think this is trying to emerge. And it's one thing I'm not showing here, Jay, is the relative strength.
Yeah.
I don't have that on this page because it just kind of squishes everything down. So but I will say that I'm looking pretty closely at the stocks that are holding up relative to the S&P, and this is definitely one of those.
Yeah, it's a good looking chart, and I like your use of the AVDX here and how you explained it, because it was at such a high level, that last high, and now we're challenging that high, and there's room to go. So that was fantastic. Next, we're going to this. This is great, Dave. You brought the SPY. We're going right to the index itself, the Spider Select S&P 500 ETF. Tell us why you chose SPY.
Okay. Before I do that, I like what Erin said about it has to be good enough for her to be good enough for her clients. And one of the things that we were all talking about earlier, at least Joe and I were talking about, is a difficulty sometimes to find picks right at the time perfectly with the show. And as far as my core position trading, as we were discussing earlier, Jay, I'm swing to intermediate term, where I'll look to get into a longer term trend on something usually like a pullback or some sort of major transition, and then hold as long as possible. But for purposes of the show, we're going to look at some things that are much, much shorter term, and then hopefully, a word you should never use in this business, they'll play out. But anyway, all I'm doing here is I'm using the 30-day EMA, and that's become one of my favorite moving averages. As I often say, I know everybody wants to party with me when I say that, but the concept that I'm using is Landry Light. And Landry Light is simply lows are greater than moving average in uptrends, and highs are less than the moving average on downtrends. And I'm kind of amazed at how this really simple concept could really help you to keep you on the right side of the market. Now, what I'm going to show you here today is some research that's from, I'm going to date myself, was discovered in 95 and published in 96 in the Stocks and Commodities magazine. And all you look for is 2 days of which it was called daylight back then, but now it's called Landry Light, meaning two lows above the moving average. And then you look to get long above that 2-bar high. So this will give you an entry about 390. Like Joe was saying earlier, I don't know if he was off air or not, but it's like, yeah, everything's looking better, but now we're overbought. So it's like the market is probably due to correct a little bit. But right now, I think you could probably get in for a shorter term trade around 390. And then if it comes back to moving average, maybe stop yourself out there. So that would be the entry on that one. And it's probably good that we're getting a little bit of corrective action today. So that'll kind of let that market consolidate a little bit before it pushes back toward that 390 level. And no trigger, no trade on something like this.
Love it. Love it. All right, Erin, we're back to you. We're going to pick up the pace just a little bit more, but your second pick is going to raise some eyebrows. GDX, the Van Eck Vectors Gold Miners ETF. What do you see in gold?
All right. So gold is actually starting to look better. It's starting to form a double bottom. I think that we're going to see higher prices in gold, which obviously puts the wind at the back of the gold miners. And then on top of that, gold miners, of course, respond to a positive market, and we're getting that too. So let me go through this. This is a specialty chart. We don't have this for every industry group, but since I had it for this one, I figured I'd bring it. So first of all, I see a pretty much textbook reverse head and shoulders here. We don't have it confirmed yet. We need to get that breakout above $26 in order to confirm the pattern, at which point we should see a move about the height of that pattern from that neckline. So that would put price easily close to that $33, $34 range. I really like the setup here, but let's go down and look at some of the under the hood indicators, as I call them. So of course, my PMO is my primary indicator. I don't buy anything unless the PMO is moving upward. That is exactly what's happening. In fact, we got that little pullback whipsaw buy signal on it. And we're really close to seeing that PMO above the zero line, which is also great confirmation. So below that, I have my silver cross index and my golden cross index. These indicators are fantastic. So everybody's familiar with a golden cross. That is a 50, 200-day moving average crossover to the upside. And so the golden cross index basically takes all those stocks within the gold miners and tells us how many of those stocks have a 50 above the 200. Currently 0%, but you look at the price chart, not a surprise. What's really great is looking a little further down and seeing 100% of the stocks in GDX. 100% have their price above the 20, and 82, 83% have price above their 50. That is what's fueling that silver cross index. The silver cross is a 20, 50-day EMA crossover. So the silver cross is telling you how many stocks within GDX have a 20 above the 50. So it's kind of a, a little bit broader look besides just looking at how many stocks are above the 20 and 50. Stochastics are rising strongly. Love this chart. I think that we're going to see that breakout confirmation of that reverse head and shoulders. And if gold can continue to form its little double bottom, I didn't bring that chart, obviously, but if it can continue moving higher, this is really going to be a great area. There are plenty of stocks in here that are beat down, and I did present one of those stocks to my diamond subscribers yesterday. So I think that this is looking pretty good.
Right. Excellent. You got me liking gold now. It's something I didn't think I'd be saying as we started this. All right, we're back to you, Joe. Your second pick is one that's been doing really well. It's in the healthcare space, Bristol-Myers.
Right. So one of the things, so this is the same weekly chart. One I didn't mention last time is this thick green line that I have on this chart, which I typically would have three different charts up, a monthly, weekly, and daily. And this green line represents the primary line that I like to look at in every time frame, which is the 18. So that's the 18-month line basically overlaid onto this weekly chart. And if you notice, we undercut it in late last year and then made a strong move up. And on this pullback, we're holding it, and we're holding price support at the same time. The other thing that's happened is the same thing that I was talking about in the last chart. Notice the MACD was overbought in April, and has spent all this time sort of working its way back down to the zero line. And what I notice is if I get a stock that's holding key support where MACD has worked its way back to zero and ADX is down at a low level like 15 or lower, you can look to be pretty aggressive on a trend line break or something like that. And that's essentially what's happening on this time frame. So I just feel like there's a really quick backstop. If you break back down below this 68.70 area, that it's just not going to work. But if it works, you're getting the start of a pretty nice move, probably a whole nother leg. So yeah, the daily chart. The reason why I wanted to show this is that, again, we're up like 4 or 5 days in a row. I mean, it's not an ideal entry point for anybody really, but I wanted to point out that big red bar back in September. I'm not a huge fan of buying right underneath the low end of a big monster bar like that. And you can also see the price resistance going back there around 76, 77. Ideally, I'd probably like to exceed that area, even though we've broken the downtrend line that I showed on the weekly. I would prefer to actually see this pause a day or two and then try and get through that 77 area. And I think that would be a really good entry if it played out that way.
Excellent. Excellent. Great looking chart there. Now, Dave, you're going to get a lot of people excited about your next chart. You're going to talk about Bitcoin. What are you seeing?
Yeah, once again, kind of looking at that, the original article was called the 220 EMA breakout system. So what I'm looking at here is 30-day EMA, and we're looking for 2 bars of Landry light, and you can't see the little 2 down below, but it's right there. Notice there's 2 little green bars down below. So that means we have 2 lows above the 30 EMA, and then you want to look to get long above those highs. The system was originally designed for currency, specifically Japanese yen, but I think it could work quite well in something like Bitcoin. Now, if you go back way back to, I guess, September, you could see there was a signal back there that failed kind of miserably. But this time, the market has based out nicely, and I think that this breakout may follow through.
Definitely one to keep an eye on and one that a lot of people are talking about. Fantastic. All right, that's 2 in the books for everybody. Erin, you're going to start us off with the third. You're going to go to one that I didn't even know existed. This ETF is the iShares North American Tech-Multimedia Network. It just rolls off the tongue, but IGN, what do you see here?
All right. Well, first of all, you're right. You probably don't know about this. The volume is very low, so just keep that in mind. Kind of illiquid here, so you have to be careful, but it passes my threshold at this point. I think that it's looking good. It's, one of the things I noticed yesterday, and of course this is pre-recorded, but yesterday we had a big dump on Google and Apple. We had all these big tech companies losing tons, but this one did not. This is more toward the cloud type of stuff. So I really love this giant double bottom. Yes, we are talking about getting in on this a bit late because we do have that huge rally, but the pattern, that double bottom is really tall. So that tells me that we still have more upside. We would see a breakout above that August high if that double bottom fulfills its minimum upside target. The minimum is the height of that pattern. So I think that we have some more upside to enjoy here on IGN. We also have a PMO that is rising after a whipsaw signal. Stochastics are above 80. If you've got stochastics above 80 and they're oscillating like you saw in July and August, that means you're going to be on a nice rally run. And sure enough, I think that's where we're at here. And then, of course, looking at this ETF compared to the SPY, I mean, this thing's just outperforming like crazy. So I am looking for this one to continue higher. Might be better on a little bit of a pullback. And I think that the market overall is due for a little bit of a pause or a digestion period. Yeah. So anyway, I love that. I love that ETF. It's just, it is low volume.
Well, I love it. I love it. And here's another one, Joe. You picked one I had not heard of either. AvidXchange, AVDX is the symbol. Let's look at it on the weekly first.
Yeah, I had never heard of it either. But I looked at a lot of charts over the course of the past week. And so you have this stock that was in a free fall, essentially. A lot of software stocks went through this. but then stabilized starting, it's been about 9 months where it's been working sideways and we flattened out this 18-week moving average. Let's go to the daily chart, though. It's one that I really want to focus on, the daily. If you can zero out a little bit.
Yep. Let me do that for you. Thank you for your patience.
Yeah. I wanted to show a little bit more history.
Let's.
There you go. You get.
Yeah. Let's keep going. See, this is where the rookie move comes in and the guest
scroll wheel.
hosting.
You have a scroll.
Yeah, I don't have a scroll wheel on the Mac.
You know what?
So
that's okay.
I apologize. I know you know it inside and out. So I may here. Oh wow. Now I see what you're looking at.
If you notice this chart, you see how we have this double bottom in place, and then we had a pretty strong move in August, and it's been forming a shelf at a higher level. So I kind of like this sideways pattern that's been forming. I'd like to see it break out of it. I mean, it's almost there. But again, we have this MACD pattern, similar to price, where it's almost like an inverted head and shoulders, where it's been testing the zero line, and we have a low ADX pattern in place. So starting to see the green DI, the buyers step in again. So if we can get a breakout here, I could see this as a pretty decent little trading play.
Yeah, without a doubt. Fascinating.
Sorry to make you work there, Jay.
No, hey, I'm glad I figured it out, and I have to speed things up. So we're going to go right to the next one, which is in the same theme of Bitcoin. Dave, you brought us Ethereum. I assume there are similarities. What are you seeing?
Yeah, so far Ethereum started to take off after a big base, and then obviously on a relative strength basis, it's outperforming Bitcoin. So it might be one you want to look at. And just like Bitcoin, same sort of pattern setting up there too. I'm actually glad to see today pulling back a little bit as opposed to just two big up bars. But notice that you've got the 2 days of Landry lights. And by the way, the indicator at the bottom, or as I like to call it, an illustrator, because it just shows you what's actually in the chart. It doesn't actually indicate anything. It's just a trend following illustrator, so to speak. But the count is 2. It's hard to see because it's behind the zero. And as I said earlier, usually if it's mostly red, meaning your highs are below the moving average, you want to be short or out of the market. And when it turns green, and this is one of the earliest patterns I will occasionally trade something like crypto. So it just takes 2 bars above the moving average. Ideally, as a trend follower, you want to wait for maybe 10 bars or so and look for a pullback. But if you want to get in something early like this, it's a good little pattern. You can get in right around where I have that line above that high. Give it a little wiggle room just in case it fakes out. And then stop yourself out if it comes down to the 30 DMA.
Excellent, actionable idea there. Erin, your fourth pick, Relay Therapeutics, symbol RLAY. Yes. Tell us about it.
All right. Well, I think the biotechs are getting ready to do some great things right now. And this one came to my attention using my diamond PMO scan. You can see, and I didn't mark it as a double bottom, but it truly is a tiny little double bottom there on price. Of that, on that double bottom, you have a positive OBV divergence. You've got the RSI moving into positive territory today. I actually kind of like seeing that bearish filled black candlestick, because it is sitting above those EMAs. And while that candlestick is a negative candlestick, a bearish candlestick, I think this is good on that breakout to just get a little consolidation. PMO rising, not yet giving us that crossover buy signal. So this is nice and early on the move. Stochastics above 50, rising very strongly. And you can see that biotechs did kind of pull back there in their outperformance, if you will, but they are starting to come back to life here. And Relay is actually doing about as well as the S&P, which is fine by me right now because the S&P is finally starting to break out. And this one's performing in line with the biotechs. When you look at the, the straight sort of line there at the bottom. And so that's good. You know that you're getting a stock that is performing in line with its group, and its group is starting to break out. So I'm looking for a move, certainly a breakout above $24, probably a test of those highs close to $28, $30 is what I'm thinking that we could get to. And of course, that would be extraordinarily great return on this one.
That'd be a nice move. And this isn't the only biotech, not to spoil anything, but we have a little tease for you. One of our panelists will be talking biotech in a second. Let's go now to Joe. Give me 1 second to find your next chart, which is Elevance Health. Am I saying that right? Let us see what you think here. We'll look at the weekly first. Go ahead, Joe.
Yeah. So again, this 18-month line, this green line, we've worked our way off overbought condition from April, came all the way back down to that line and got a Super Bowl bounce off of it. I like it when the MACD works its way down to zero like that and bounces off of that quickly, especially when there's low ADX. So now this is one of those stocks that I wanted to put on, even though like there's a difference between I want to buy a good stock, but the timing on this, especially if we go down to the daily chart, you'll see that it's made a little bit of a run here in the short term. I'd like to see a little bit of a pullback.
Okay.
But
that is a heck of a run. I
yeah,
see why you
so
would say that.
the interesting thing is if you notice the ADX on this chart is crossed above 25 for the first time in several months, a very long time, actually, really going all the way back to May, really. And based on the buying strength. So I'd be looking for any kind of a little dip back towards the highs of the breakout, probably right around 520 or something, 510, 520, something like that. Any kind of a little dip, 3 to 5 bar pullback here, I think would be pretty interesting as long as it's orderly. We've got the start of something on the weekly. Now I just want to time it a little bit better off the daily.
All right. I like how you do it. And anyone that's watched the shows and has seen me, I like to have those time frames just to really give the big picture. So you're hitting a chord with me. So that's pretty cool. Next up, we have our first short idea. Dave, we're going to go to UUP, which is essentially the dollar. Why don't you explain this choice and what you're seeing here?
Okay. Now, keep in mind, normally I'm trading individual stock issues and I'm looking for inefficiency. And that's something that I haven't found in a while. And I've been trying to go after the goals, but they don't seem to want to trigger for me lately. So I think Erin's on to something, but she might be a little early, but I think she's definitely right. But anyway, something to throw out here. The dollar's been in a great trend for a long time. Look at the Landry line at the bottom. You've had a lot of lows above that moving average, as you can see. And that's just a count, by the way. It's not a magnitude. And now we're starting to see some downside Landry light. And if you look at the bottom, you can see with today's action, we have 3 bars where the highs are less than the moving average. And oh, by the way, full disclosure, I did short 100 shares to make sure this was shortable. So I wasn't pitching something that you guys couldn't do if you wanted to do it. Anyway, once again, you've got the 2 bars and then now 3 bars of Landry light. Entry below the lowest of those first 2 bars, and now it's 3 bars. So right about where I have that line drawn, probably about 29.80 or so. I'm sorry, 29, I guess 40 or so on the chart.
Right here, 29.40
would be an entry on that, and then maybe look to stop out if it goes back to the moving average. But it looks like the dollar, to my amazement, has gone up for so long, and basically I think it's just the dog with least fleas as it's been for such a long time. And I think we're starting to see the beginning of the end with the dollar, and that's why I decided to bring this chart up. Or something an idea to throw out.
Excellent. So our first short idea, our only short idea. And now we're down to our final picks from each panelist. Erin, you're up first, and you've chosen the Invesco Solar ETF 10. That's a popular ETF. What are you seeing here?
Yes, I've been watching this closely. I love this group. And seeing that breakout from that double bottom yesterday was, that was pretty much the high sign for me. We saw Enphase had a really great day. I'm sure that contributed to what's going on this particular chart. But this one is always very lucrative, but at the same time, very risky. So I would caution everybody out there, super volatile kind of a ETF. ETFs, you usually lose the volatility, not with this one. So we have that big move up. I was a little concerned about a reverse island setting up here, but today's follow through really tells me that we're on the right track here. You'll see the PMOs on a buy signal. RSI just got positive, and you have that really, really nice positive OBV divergence. Those are hard to find, and to find one here on this particular ETF got me pretty excited. You can see stochastics getting close to being above 80, rising vertically, tells you a lot of internal strength here. And you can see how this ETF and this group has really been beat down, but we're now finally seeing relative highs that are breaking out of that declining trend. I did want to mention, I haven't talked about it, but you'll notice on my charts, I have stop levels put in. I do that whenever I present a chart to my subscribers. This one's a little deep, but the reason it is obviously it's very volatile, and I wanted to be under the support level back in June and July. So that is my final pick. I'm looking forward to seeing everybody else's.
Yes, yes. And we will get to that. Joe, you're going to the energy space, I see. And as soon as I can click, here we go, Joe. NexTier Oilfield, based out of Houston, where the Astros play. I don't know a single soul outside of Houston rooting against my Phillies. But it's a nice delay tactic as I get to your chart. Here it is on the weekly. What are you seeing here?
Yeah, I mean, similar theme. If you notice the pattern, I have different representation from really just different sectors every time, but I'm looking for these stocks that showed strength to the upside. So starting in 2002, we got this dynamic move to the upside where the AVDX reading got up to like 50. And that to me is a sign to expect continuation after a pullback. We've now had a pullback. We've worked off the overbought condition, and now it's starting to work higher. One of the things that was difficult for me finding ideas was I was trying to dodge earnings. I was trying to find stocks that don't have earnings coming in the next 2 days. And so this one just had earnings. And if we go to the daily chart, you can see we've got a little volatility based on that. And I'd like to see this. It's testing the 10 area, which I like. If this can hold here and turn back up through the highs of the last 3 days, I think that would be a really bullish sign, especially when you look at the AVDX and this. So this one also has the same strength on this time frame. So I've got two different time frames where the AVDX on the last move to the upside is kind of confirming the move. Now I just need a sign that we can, kind of trigger us in. We don't have a trigger yet. We have a setup. We just don't have a trigger.
Gotcha. All right. I was hoping someone would go to energy, and you did that. And then last but not least, this not that I have favorites, but this was the one that raised my eyebrows the most. Dave, you went to Biotech, and not only did you go to Biotech, but you went to LABU, which I'm punching up right now, which is the triple leveraged S&P Biotech Bull Index. I don't know exactly how you say that, but tell us what you see here.
Okay. Now, usually, by the way, with these leverage things, I just usually hold them intraday, but it is kind of setting up for a possible multi-day move here. In the bottom chart, I have what's called my bow tie indicator, or actually it's more of an illustrator, but it's proper order. And for downtrends, that means that the 10 simple is less than a 20 exponential, and 20 exponential is less than a 30. And then for uptrends, the 10 simple is greater than the 20, and the 20 is greater than the 30. And what kind of turned out pretty cool when they programmed this in is it kind of gave you a green light, yellow light, red light when it comes to market trends. Now, moving averages can be a little slow, have a little lag, but that could actually be a good thing and kind of a built-in whipsaw filter. So what I'm seeing here on the hourly chart, and I had to drill down to hourly to find something to pitch, but I noticed that we did make a nice little turn from red to green with a little yellow in between. And when that happens and the moving average is spread out, it gives the appearance of a bow tie. So it means the trend is trying to change or possibly has changed. And what we do is look to enter after a pullback. So in this case, that little green line, that would actually move that over it's too much trouble, but probably about 755 or 760 would be a good entry on that. Okay. A little bit more aggressive entry, maybe down around 760, and stop yourself out probably around 7 on that one. And that's for like just a shorter term trade. I'm not a big fan of holding these leverage things overnight, but I think you have a possible several day swing setting up in the biotech. And biotech in general has been strong on a relative strength basis. And I see Erin shaking her head. Thank you, Erin, for that vote of confidence. I know she had a bio earlier.
She did, and I couldn't agree more. And I like how you prefaced it, and all of our panelists have, with the risk management being primary, because this is a much riskier asset. So your time frame is set up for a much shorter term trade. So I think that anyone listening to this really has to stress that, knowing when you get into something like this, have that set up in mind and know what your time horizon is. So that concludes our panelists' 5 picks. Let's review them real quickly. We're going to go Erin's first, her 5 picks. She started with ChargePoint, Van Eck Gold Miners ETF, symbol GDX, iShares North American Tech-Multimedia ETF, IGN. RLAY Therapeutics, symbol RLAY. And last but not least, TAN, T-A-N, the Invesco Solar ETF. Joe gave us 5 great picks. He started with Archer-Daniels-Midland, symbol ADM. Probably the most well-known stock of the 15 we chose today in Bristol-Myers, symbol BMY. AvidXchange, AVDX. Elevance Health, ELV is the symbol. And last but not least, he went energy, NexTier Oilfield, symbol NEX. And then last but not least, Dave. Dave gave us some really fascinating picks, actionable ideas right now. First, we started with the SPY, the S&P 500 Select ETF, SPY. And then we went to 2 of the most popular traded cryptocurrencies in the world, in Bitcoin and then Ethereum. He gave us a short idea, the only short idea of the group, symbol UUP, which is essentially Invesco Deutsche Börse US Dollar Index. And then last but not least, the LABU, which is the S&P Biotech Bull 3 times share ETF. So 15 great choices by our great panelists. And now let's talk a little bit about them. I want to hear more, not just about the stocks, but about the process itself. I'm going to start with you, Erin, because we started with you in the process. I noticed that everyone is very different in how they do it, and that's why I like this panel. We have different StockCharts platforms, whether it's the ACP or the traditional StockCharts platform, which I use as well as you, Erin, and then different indicators over different time frames. So, Erin, I know I'm not picking on you here, but you do have the most indicators to kind of just really drive home what you see in the stocks. What are the 3 most important things to you besides price when looking and trying to make that decision? I want to pick this stock for this show.
All right. Well, I have scans that I do, so I have some help right there. And the primary indicators I use in my scans are, of course, moving averages. I know Dave and Joe rely on those as well. I think most of us do. And the PMO is a big one. RSI, of course, that tells you where price is in relationship to the last 2 weeks price range. So I think that's really great because it shows internal strength and relative strength just in general. I don't use that in my scans, but whenever I pull up a chart, seeing those relative strength lines, I think are really insightful. The best one, as I said, the very last one that compares that stock to its industry group. You want to get those outperformers within the group, and that is the best way to do it. So my scans are really the primary thing that I do, but my PMO, I'm married to the PMO. What can I say? That is my all-time favorite indicator.
The PMO, you got me onto the PMO when we did a pitch together, and I had always heard about it, but then seeing you put it into your process and explaining it the way you did is definitely something I'm now tracking. And Joe, you do something I also track a lot, especially on the longer term horizons. You put multiple timeframes together to confirm what you're doing. And you also use the ADX a lot. Where do you see the ADX and how did you come upon saying this is an indicator I really want to follow closely?
Yeah. The way I use it mostly is to identify. So what I'm trying to do with ADX is narrow my universe. So if I start out with, I'm looking at maybe like 3,000 stocks that I go through. So I don't like to run a whole lot of screens. I like to run volume screens and market cap screens, but I like to go through a lot of individual stocks. But what the ADX does for me as I'm going through is it can shrink the universe down. It can take it down from 3,000 to 300 of stocks that basically have some characteristics that I think are telling me there's some real potential there. And then I'll use the MACD to help off of that in terms of the timing. I like to use MACD for timing and specific signals, but I like to have the ADX help me with really shrinking the universe down and finding out the ones that really have the most strength.
Yeah, exactly. And I'm just looking at a chart of Bristol-Myers. I'm not sure if my screen's still shared, but the MACD on the weekly you're looking at a potential crossover. And to me, that screams as a potential entry point right there. And then it already on the daily has made that crossover. So I see exactly what you're saying when you talk about the MACD. That's one of my go-tos, and the ADX. As I learned from you guys as well, just like the PMO is something I will be following a lot closer based on how well you've used it in your process explaining things. And then Dave, you're a man after my own heart. I was market maker on the floor for 28 years. I traded for seconds, minutes for a long-term trade. And you brought with you some great setups in some really volatile issues. But you have your own indicator. I know you probably said this story again and again and again, but when did you say to yourself, Eureka, I found something I'm comfortable with. And from a risk reward standpoint, want to use that. And I'll put up the Bitcoin chart here to give myself that entry point, and just explain that process to us.
Okay. Well, first of all, just to get back to like the selection process, usually I go through a couple thousand charts every day, and that's stocks. And then I also look at a lot of sectors to get a feel for what's going on. And that's sort of where a lot of today's analysis came from. But my core methodology is swing to intermediate term, and we'll hold stocks longer term. I'm looking for that inefficiency in markets. And usually it's like something wild and crazy like a biotech, but to my surprise, it was a coal stock that we've been in for almost 2 years, was down in the low single digits. But as far as something like this, I don't use a lot of indicators. Normally, I always start with a blank chart and then put in the occasional moving average. But the great thing about something like the Landry light, which was discovered way back in the mid-90s, is it can help to keep you on the right side of the market. And the little indicator down below, like I said earlier, I see it as an illustrator. It kind of reminds you, okay, this market is trending lower, this market is trending higher. Or if it's green and red, green and red, green and red, it might just be going sideways. Same thing with the bow tie proper order we looked at earlier. So with something like this, especially after this big base, I don't take a setup in a vacuum. I look at the bigger picture to see what's going on. I don't trade off of that bigger picture technical analysis like a head and shoulder bottom or a big base or a cup and handle, whatever. But I will look for patterns within that bigger picture pattern, swing trade type of pattern. So in something like this, I think we got a short-term pattern setting up. We got a little breakout out of that base. And I think with a little bit of that Landry light coming in, it's trying to pull away from or break away from that moving average. And I think it might be worth a shot. I don't know if I answered the question directly, but
you did, and you explained it very well. And I just wanted that is what was so fascinating about this group, are the different timeframes, and everyone has a different process. There isn't that cookie cutter strategy where one thing fits all. But there was one thing that struck me as interesting about the picks that we had. No one picked any technology stocks. There was no FANG names. Some of these stocks are pretty beaten down, but from a technical point of view, it may be hard to pick things. And Joe had mentioned this before we got on, and I'm going to go to you, Joe. You said this October pitch was one of the more challenging ones for you to find something, 5 charts to bring to the table. What was the most challenging thing for you as you were trying to pick your 5?
Well, it was really timing. I had so many stocks that look great, but I don't really like bringing them up when they're, intermediate term overbought. Even short term overbought scares me a little bit, because I'm not trying to put someone in something and have it go down for the next 3 or 4 days. So, as long as you understand we're trying to get a little pullback in some of these, then it was, from that standpoint, I didn't think it was that difficult. What I will say, though, about this market right now is that whenever the biggest stocks, the stocks that I call the heavyweights, are going in the opposite direction of what you're trying to do. So I think the market wants to go up, but the heavyweight stocks, the stocks that have the biggest market cap, are all going down, or at least weakening, or every time they come out with earnings, they go down. Yeah. So, from that standpoint, you're fighting a little bit of a headwind, and it makes me a little uneasy. It makes me feel like, I've got to be really, really fine-tuned with my entry. I got to be really fine-tuned with my risk parameters. I got to make sure that if I'm putting something on, I know exactly how much I'm risking. I'm not going to go crazy with something. just try and wait for a little bit more confirmation in terms of the bigger picture before I go and look for a huge win or something like that.
Yeah. And Erin, when you were going through this process, did any technology names, were there sectors you're just avoiding or?
Well, I have to say, renewable energy is considered technology.
True.
ChargePoint, while it's in discretionary, is still in that EV sort of area where you've got a little bit of that tech behind it. And then, of course, that cloud ETF. Now, come on, Jay, I had some technology out there.
That's true. I know. When you do technology, you're focused on the big guns. And
by the way, Jay,
I agree, though, the FANG stocks, I mean, looking at yesterday when they all pretty much dove downward, but it didn't overly affect the market, if you know what I mean. I mean, the market did go down, but considering those major stocks that usually lead the market to the up and the downside, I mean, the market really held up pretty well. So to me, technology is somewhere we need to look, but we have to really go into those industry groups and find those pockets of strength in order to really be successful there. But tech, I mean, if the market is going to rally, tech is going to be in there somewhere, somehow. And so renewable energy, I thought was a good way to go into that tech space.
I hear you. And Dave, what were some of the things that stuck you besides, the Bitcoin and the Ethereum trades? What do you see?
Well, the list that I give to my clients every day, which is my call list, and like Erin said earlier, again, I wouldn't give them anything I would do myself, but I recommended not taking any action. And most of those, I'd say 6 out of 7 of them were short semiconductor. So technology is still looking questionable, as you may be alluding to in there.
Yep.
It is pulled back, but I just can't really get excited about shorting. Some of these stocks are already at lower levels. And if you're going to short, shorting is a little bit tougher than going long, as I think most of you agree. And you really want that setup right as it's rolling over, as opposed to the longer term downtrends. So that's why I decided to go against recommending any direct shorts, even though that's what my scans are pulling up right now, as we're still in a market where, again, like Joe, I think said, there's a lot of headwind. The trend is still down. We do have a temporary bottom in place, and you should never use the word hope in this business, but let's hope for the best, and I guess brace for the worst just in case.
And Joe, did you want to add something in there too? I know you had a thought when Erin was talking.
Oh, well, I was just going to say AVDX is a software company, so it qualifies as a tech name. It's not exactly, a big tech name.
I hear. And it's funny because when I introduced AVDX, I said I didn't know it, and neither did you. And a lot of technicians get criticized for not knowing the deep story. I'll find a chart and then I'll look up the fundamental story behind it, and then the sector, and then build up that way. So there are over 3,000 stocks, and now if you add ETFs and everything else, it's your scans will come across certain things, your own research will. So when people say, "Oh, you don't know the symbol of what you're looking at," no, sometimes we don't. And that's what technicians, we focus on price. And speaking of prices, October, historically the most volatile month of the year. Yes, we've had crashes in October. We've come through unscathed. This is the best month in the Dow since October '87. Now '87 is another scary year. But I wanted to get your take, the three of you, where you see the market year end, sectors that you think will perform the best, and then I'll hit you with one last question. Erin, I'll go to you. What are your thoughts going into November, December? Do we finish higher or lower than where we are right now? And what sectors lead us?
I think we're in a period of favorable seasonality coming up here. And so I am looking for the market to continue higher. Now, how long it will continue higher? There's still a lot of downside pressure. We're still in a bear market. Decision Point is definitely not saying that this is the end of the bear market, but I think we do have something shaping up that's really similar to what we saw back in July and August. So I think we're going to have a nice little extended bear market rally. I think Santa Claus is going to be here, and I think we're going to do pretty well into the end of the year. And Dave, you're right. We don't want to talk about trading on hope, but I mean, come on, we are hopeful. that's what's going to happen. It's been a pretty rough year so far.
It has been. And Joe, what is your take on the next 2 months? What are you looking for as far as possible leadership and direction into the year end?
Yeah, I mean, I have an upward bias. I don't really like to make a call whether I think it's a new bull market or whether it's a bear market rally. I mean, if someone put a gun to my head and said I had to pick, I'd probably say it's a bear market rally. But my thinking actually is that we had this massive bearish sentiment, and I don't know if it's going to last until the end of the year or not. But we have to work that off. It's starting to come off, but it's not at a level where I would say it's completed. And so I have a feeling with bias is up until that shift takes place, and it probably will. It's very possible that could take us to the end of the year. But depending on the strength of the rally and, how much participation there is and whether we really shift some trends or not, will tell me whether, come January, we just start heading down again. So I'm very anxious to watch and see the strength of the move and the momentum behind it, determine how strong this is. But I would say right now I've got an upward bias just based on all the bearishness just in the last week or two.
Yeah, I hear you there. And Dave, we know you like crypto, at least over the short term.
Yeah.
What do you think the direction of the market is for the next 2 months?
Well, I'm a trend follower, not a trend predictor. Years ago, I worked for an options hedge fund, and I'd say the trend is up, and they said, well, how far it's going to go? I'm like, I don't know. It's like, well, how long does it take to get there? I'm like, I don't know. It's like, how volatile it's going to be? It's like, I don't know. Right now, the short term, we're trying to go up. As Joe said, could just be a bear market rally. One thing that I find kind of interesting, and I was a little hesitant to do the presentation because it's some non-price things that I'm seeing, and I called it harbingers of a bottom, and I did a recap on that in my StockCharts show, Trading Simplified show. And what I'm seeing is a lot of things like my phone starting to ring by people freaking out. Even though I did a presentation last summer and when the market was at new highs and said, look, don't call me when you're down 30%. When the market drops 10%, think about getting out, showed them a little system, the whole 9 yards. But my phone's starting to ring and everybody's talking about doom and gloom right now, like we're never going to get better. And usually, as you know, you've been around a long time, the stock market's usually bottom on bad news. Now, that's a non-price indicator. I would look at price-based things like if we could stay above that 30 EMA on a daily basis and then get above it. He tried to say on a weekly basis and maybe see those moving averages turn up. And of course, price itself moving higher, then I think we're okay. So for the short term, we're okay. I kind of want to side with Joe a little bit. It feels like a bear market rally, but I think there's going to be some shakeouts and fakeouts along the way. But right now, let's err on the side that the market is improving, and let's just wait for setups. And gold might set up some nice little setups here. We might see some in biotech. And we're going to take it on a case-by-case and individual stock basis. I think you try to predict far out, I think you get into a lot of trouble.
Yeah, and I think you speak for the whole group by saying, let's look for setups. And Joe, you had mentioned it. Yeah, it's difficult finding setups because we've seen some quick moves recently, and then you just kind of want to see them set up. And that's why we have the show, The Pitch. That's why we go through 5 picks carefully by each individual and, explain the risk reward behind it and what we're seeing. So I want to thank everyone for joining us today for the October edition. Erin Swenlin, Vice President and Senior Technical Analyst at Decision Point. Joe Rabil, President of Rabil Stock Research. And Dave Landry at davelandry.com. It's been my honor to fill in for Dave Keller. My name is Jay Woods of DriveWealth. And thank you for joining us on this edition of The Pitch. You can always watch The Pitch on demand on StockCharts.com and StockCharts TV or YouTube. If you're watching on YouTube, feel free to click that like button, follow us, and add some comments. We'd love to hear what you're saying. If you don't like what you saw, my name is Dave Keller. If you like what you saw, my name is Jay Woods, and we welcome you to next month's version of The Pitch. Thank you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.